You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.
It's time for Volatility Views, the premier program for volatility traders. Each week, we'll take a deep dive into the world of volatility with in-depth analysis, trading activity reviews, strategy breakdowns, cutting-edge education, and much more. We'll also bring you exclusive conversations with the traders, researchers, and asset managers who are reshaping the volatility landscape. If it involves volatility, then you'll find it on Volatility Views. Volatility Views is brought to you by Russell Investments, home of Russell Indexes, which calculates approximately 700,000 benchmarks daily, covering 98% of the investable market globally, including more than 80 countries and more than 10,000 securities. Approximately $4.1 trillion in assets are benchmarked to the Russell Indexes. For more information on Russell Indexes and RVX, please visit russell.com/indexes. And now it's time to take a deep dive into the world of volatility. It's time for Volatility Views.
All right, everybody, that music means it's time once again for Volatility Views, the premier program for volatility traders. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network, a baker's dozen worth of programs for you guys to check out on said network, including many, well over 100 archived episodes of this here program, Volatility Views. And where can you go to find all of that audio goodness? Well, of course, the easiest place, the best place is theoptionsinsider.com, our online portal du jour. You can find everything there, all of our written content, our education, our analysis, some breaking news on the options market, et cetera, unusual activity, and, of course, all of the radio on the Insider Radio Network tab. Of course, all the other destinations also work, iTunes, TuneIn, et cetera. And then, if you just want to grab the app, you just want to have it all just spoon-fed to you in the easiest way possible, our app available on iOS, Android, and even the Fire OS will do that job admirably. And of course, while you're in the app, you can even use it to reach out to us with your questions, your comments, your insights, not just for us, but for your fellow Volatility Views listeners. And joining me on the old program today are my usual volatility compatriots. Let's go in order of distance. Actually, I'll have to think now. Maine versus Oklahoma. I'll have to see which one's a little bit farther. I'm going to go with Maine because the hinterlands of Maine are just far away from anything really in civilization. We are joined by the Rock Lobster himself, Mr. Andrew Giovinazzi. Mr. G, welcome back to the Volatility Views program. And how goes the ice rink saga?
The ice rink saga continues, but I finally did get my dock out of the water.
Well, there you go. I know all of our listeners will be quite relieved at that, sir.
Fourth try.
And I mentioned Oklahoma is usually joining us from his corner suite there at the Options Institute over there at the CBOE, but he's off in the South getting some learning on over there, but he's kind enough to join us yet again. He is Russell Rhodes, the senior instructor over there at the Options Institute. Russell, welcome back to the program, and to our listeners, what are you studying over there in the South?
Well, you know, I love how you said that I'm kind enough to join you guys. Hey, you're getting me out of class right now. There's something to be said for that.
You're ditching class. You have a teacher. You have a note from your parents.
I have. I actually, everybody's going to have to listen to a recording of this tonight. I am working on a PhD at Oklahoma State University. It's a 3-year program. The degree's actually in management, but we come here and have a residency once a month. So I'm here 3 days once a month, and then we do an awful lot of stuff by Skype. So it's keeps me very busy in addition to everything else.
Well, if you need some practice, I'll let you manage the rest of the show. I'll go grab a coffee. That's a good idea for me if you're up for it.
No, I'm looking forward to hitting the mute button and listening to you guys as well.
All right, then. Without further ado, let's get started and dive right on into the volatility review.
It's time to break down the latest developments in the volatility trading world. It's time for the Volatility Review.
All right, money. Indeed, it is time for the Volatility Review, the portion of the program where we break down what caught our eye, what was rocking and rolling, and indeed still is rocking and rolling as we are recording this on Friday, November 13th, for all of you out there. Lucky Friday the 13th. For all of you playing the home game, and after a pronounced sell-off yesterday, we're seeing a little bit more weight to the downside today. It seems like the Fed's rub on the market hasn't really given up yet, continues to pull things down. The sell-off has extended itself as the session has gone on. It was pretty mild at the beginning of the session. Now here we are midday, and the S&P off about 0.6 of a percentage point, the Dow off a little more, the NASDAQ off over a percentage point here, and the VIX Cash, not surprisingly, continuing its streak of the last couple of days of moving to the upside. We actually saw a brief flirtation earlier this morning, I believe, over the 20 handle, so the VIX Cash getting back into that elusive 20 range. And, of course, we had that extended, protracted period over 20 for quite some time. We got up into some lofty areas there on Russell's streaks over 20 chart before the streak finally came to an end. And now we kind of had a very piddly downside streak. Wasn't too long under 20 before he got back up there again, hovering right around 19.5 right now. So we'll see if this sell-off continues, maybe even by the end of the show. We may be back north over the 20 handle again out there in VIX land, and it's kind of been a tale of bids for the most part in a lot of the products. Particularly yesterday, Andrew, you and I were commenting on this a little bit on the option block program that the futures out there in VIX land really just took bids everywhere, particularly obviously in the near portion of the curve. That's where it was nearly a $2 jump in that no future, which is pretty outstanding. But across the term structure, it was just bids, and we kind of remarked just how it seems there is almost this odd, I don't want to call it binary, but it kind of feels like it, mood to this volatility marketplace where all of a sudden today's the day, and today's the day the Fed means something, and today's the day the market's going to sell off, and all the vol is going to come flooding back in. And then another day later, it's, the vol's coming out again, or whatever the case may be. It's got this it's almost like a cat. I have to be here now, I have to be there, I have to be there. It's a crazy, crazy market to watch. But again, selfishly, it makes for some good discussion. So, Mr. Rock Lobster, in addition to all your issues with backhoes and whatnot, what's been catching your eye in today's market activity?
Oh, I'm glad Russell's here too, because maybe he can comment on this. Like what I saw this week, what was weird, I thought, was just how much it felt like volatility moved so much more than the actual S&P did. I mean, we had 5 straight days of down, which generally, that will kick the VIX up just normally. But we kind of it did feel like yesterday and today, yesterday we had a move. We finally had a move that was priced, but I mean, we were trading like at an 18 VIX or 17.5 VIX. And we're only moving, realized vol was like 8% or 9%. So it felt like as soon as we hit those all-time highs, paper just started buying puts, and they started bidding up volatility because we weren't going to sit here, because ultimately there has been no decision on rates, and it was just a matter of time before the market sold off again as we worried about it. And I think, personally, I think volatility is going to still stay pretty jumpy because of it. And I think that's what in reality, that's what we got. I think we have a lot of, let's just say we have some jumpiness. Is there any real reason for the stocks to sell off, even though everybody knows that we're going to raise at some point in 2016? Probably not. But the grenade of, late August is still out there. So it's very easy for volatility to go up now, I think, in an electronic market, because all liquidity providers are saying, screw it, we're taking it right up. We're going to take it from 15 to 18 now. we'll give it an hour, and we'll just hit the up button because nobody's selling it and everybody's buying it. And I think that's, when you have a day when the only stuff that really is green on my board right now is the long vol products and the TLT and a couple of assorted biotech stocks. Other than that, it's just not very, the volatility is jumpier than I think it should be. And I also noticed the last couple of weeks, the November future, really touchy on the upside. Like it's almost like they couldn't wait to pull the ripcord and let the thing fly. So, and I guess there was a reason, you have a VIX, you have a 1964 VIX. And I think that future, the November future, was trading just around 16 3 days ago. So big move for volatility. Not such a big move for the market, but a big move for vol. And I am not sure if VIX really comes down in a meaningful way, even if we rally a bunch.
Yeah, you're right. The action has all been on the volatility side of the fence more than in the actual underlying. It seems like when Miss Yellen starts waving that finger, the vol responds in a big fashion. Our old friend VVIX, which is indeed the volatility of VIX, essentially back over the 100 handle, the first time it's been up there in a while, at least 3 to 4 weeks. So yeah, VVIX kicking it up, volatility of VIX rocketing, even as the underlying seems to be monodirectional at this point. We'll see. Of course, the day still has to play out, so anything could happen. But it's been an interesting one. Russell, in addition to your forays down there to the deep south for some grits and some learning, what's been catching your eye this week from a volatility perspective?
Well, Andrew said everything I wanted to say, so no, seriously, just to kind of add on to what he was talking about, it's interesting that we're getting the jumpiness that we are out of VIX, but we're also getting it off of a base of like 15 and 16, not 11 and 12 like we saw about a year or so ago. So, the fact that it's jumpy, remaining elevated, and then, making moves like it is, even though we seem to be having, we're selling off, but it's not dramatic. It's somewhat orderly, and sometimes the VIX detractors get a little upset, or they use an argument that we that if we have an orderly sell-off, VIX isn't going to move higher, and we are seeing VIX we're seeing VIX move higher in kind of a stair-step move to the downside.
Yeah, stair-step, that's a good definition for it here, is what we've been seeing here in the old marketplace. And of course, VIX Cash, like we said, flirting with that 20 handle briefly today, kind of giving it up a little bit now. We'll see if by the end of the show we can get closer to that range, and of course a lot of that impact indeed coming on the heels of what we've seen out of the Fed and the growing reaction, fear, call it what you will, to the potential of a raise, even though we've said it many times on this program and other programs on the network. At the end of the day, it's not a substantial, we're not talking a full point here. The market's reacting like it is, but I think just the fact that we are in this frame of reference where we haven't raised in the better part of a decade, any raise is significant and consequential, regardless of how minute it may actually be and how much of it is actually probably already priced in to the marketplace. Of course, one area that has been, despite the market, particularly volatility, rocking and rolling, one area that hasn't really been rocking and rolling as much as we saw a few weeks ago, and this is, of course, the old Skew Index. You mentioned a few weeks ago, listeners, about 3 weeks ago or so now, that the Skew Index was just extremely heavy, showing, I think it was actually hit at record levels, over 150. It had never gotten up that high before. And since then, it kind of has settled back down into the mid-130 range or so, hovering right around 137 or so today, pretty much almost even with where it was last week, despite the fact that we have had a little bit of movement in the market this past week, still hovering around those same levels. So interesting stuff. The Skew Index not really responding either upside or downside, really, to what we've been seeing going on in the market and this extended sell-off we've seen over the past couple of sessions. Mr. Russell, does that surprise you at all? The Skew Index kind of back to that range it's been in for quite some time, and not really rocking and rolling the way it was about a month ago?
Well, when we talk about skew, we always have to talk about the denominator side of how skew is calculated, and that is near nearer implied volatility on the put side as opposed to farther out of the money implied volatility. And we've got, when we were talking this time last week, VIX was in the 14s, and now we've got VIX up around 19, and we've got skew holding at 130. Well, it has to rise, and it has to rise more than at the money implied volatility, or out of the money implied volatility on the SPX options actually has to rise at a higher rate just to maintain an even level of skew as VIX rises. So, it's not rocking and rolling, as you put it, but just holding up like that is actually an indication of some concern as far as downside protection goes, out of the money downside protection.
That's true. As you move into the lower portions of the curve out there in SPX, you'd expect skew to come in a little bit as we're getting towards those out of the money puts. The fact that we're not seeing that does indeed imply some buy-in, some bidding, some inflation of premium. So therefore, perhaps I didn't give skew its just due there, Mr. I almost called you Rock Lobster. Russell and Rock Lobster. It gets a little confusing on the old show. But I know, Russell, you're also heavy into the trends out there in VIX Cash land. I kind of mentioned it earlier. We had that brief flirtation over the 20 handle out there in VIX Cash. Has that caught your eye? Does that put an end to our brief streak below the 20, or is it, in your mind, do you have to close above 20 before you can start changing up your data points?
No, the tick over 20 is more than enough for me, and it's interesting that 20 level. After we got through October and VIX was starting to trend lower, I started playing around with a new function on the Twitter where you can do binary surveys where you can ask yes or no questions. And my first survey was I put out there on November 3rd. It was, do you expect to see VIX top 20 sometime during November? And I didn't qualify it by saying close above 20. So that means that the answer is now yes to that one. It was almost split down the middle. I got 144 votes. Only 47% of people thought it was going to tick above 20 over the course of November. So, the majority lost in that one.
That's impressive. Good response on the VIX poll there. And you're right, it is, I guess, it would be interesting. Speaking of the binaries, it would be nice. How nice would it be to have a VIX binary out there? Maybe we need to call the Nadex guys and get something going on behind the scenes there. I think that would interest a lot of people. Would VIX Cash be above this level? Yes or no? That would get to the ever elusive, as we've seen with VIX up and VIX down, a way to try to trade the VIX Cash a little bit more, maybe straightforward for a lot of our listeners out there. Speaking of the VIX itself, like we said, particularly we mentioned the futures, getting into the options realm, despite the fact that the market was selling off a bit this week and the VIX Cash and the futures were popping. The VIX options not really so much lighting it up this week. Kind of a surprising development. You'd think particularly the last few sessions would have been extremely high volume. Of course, today is maybe catching up for that. Today, we're already past the ADV by about 100,000 contracts or so. So we're probably going to push 1 million contracts today here on Friday. So I guess the market was waiting until Friday to do all their contracts, because the rest of the week until today was extremely light. Some days, south of the 400,000 contract mark, and even below that. So one day in the south of 300,000, which we haven't seen in a while. So yeah, pretty light going into the beginning part of this week. I guess people, the rub had kind of come off of the rest of earnings season. Not a lot of excitement there. Then the sell-off started happening later in the week, and all of a sudden, VIX coming back to life. We'll see how many contracts we can put up today. Looking at the near portion of the VIX options curve first, we talked a lot about weeklies. In fact, we have a listener question about them a little bit later. And we talked a lot about the volume this week. Kind of a light volume week overall from a weekly and from a regular volume perspective as well, obviously today. Notwithstanding. Russell, anything catching your eye out there? We talked a lot about put buy-in last week. Across the months, kind of just straight up seemed like a time stupids going up, for lack of a better word, out there in the weeklies. Anything actually catching your eye out there in the weeklies this week in terms of paper or interesting activity?
Nothing really popped up that I was able to come across. Like you mentioned, I'm at school, so I'm only paying attention to the markets half time. One of the things that may explain the light volume despite VIX moving higher this week was it seems like a lot of traders were going ahead and rolling out to December or setting up for some sort of volatility spike out in December. And doing it a little bit early once we got all the big economic numbers behind us over the last couple of weeks. So I think that may have an impact on why we haven't seen quite the option volume that you would expect in conjunction with a spike in VIX. There's one other aspect to that's slipping my mind right now. Sorry. One of those things that'll come to me in just a second.
That happens when you're on the radio. Sometimes the thoughts just twitter away. It happens to me all the time. But we were talking about put buying last week, particularly out there in the weeklies. I should mention, whenever we talk about these types of positions, typically there is an offsetting position somewhere else in maybe the listed SPX contracts or OTC, a lot of it OTC. We don't always have a chance to get to that here on the program. A few guys writing in saying, hey, what about some contrasting positions to these? We try to hit those whenever possible, but not always possible in the time allowed. We just talk about the listed portion and what we can see kind of easily, let you guys intuit the rest out here. But of course, those Nov 14 puts out there in the weeklies we talked about for size purchases last week, about 16,000 still open out there. So our friend out there still open on those puts, hasn't had a chance to close those out, and probably not many opportunities to do so, as pretty much ever since he put those on, the VIX has looked nothing but north ever since. Of course, like I said, he probably has some other positions, OTC or otherwise, where he's probably smiling all the way to the bank and not too concerned about those puts. They were probably more of a hedge, extreme hedge, than anything else. Like I said, it was kind of light overall in the full. Well, it looks like, Russell, you've remembered your fact. Would you like to share it with the rest of us?
No, well, as I was talking, I was thinking that I had the exact same thought back in August. We got, the first half of the month behind us, and we were seeing more October trades than you would normally expect during that period of time in August. And it seems like the exact same thing is happening right now, where everybody's skipping a standard expiration and going out to December. And, next thing you know, everything kind of went to hell in a handbasket. So there might be a pattern repeating itself here.
Uh-oh. Keep an eye, Mr. Russell saying there's something in the tea leaves to keep an eye on out here in VIX land. Looking at the volume, like I said, it was tough to parse some size trades. I'm sure today there's quite a few lighten it up. In fact, maybe I'll pull some real-time data here as we're getting on a little bit in the show. But for the rest of the week, it was pretty slim pickings from a size interesting VIX paper progression. It seemed like for a little while there, it looked like the put buying narrative might be back and forth earlier this week, about 10,000 of the Nov 14.5 puts going up out there for about 9 cents. Again, some size open interest out there, so it could have been closing on that end as well. We also saw some upside call spreads going up. Looks like paper selling about 6,000 of the Nov 17.20 call spread. Again, neither of those two on the face of them looking very good later in the week. Let's hope they had something else over there offsetting it. And we also have the Nov 1922 call spread going up. That one a little bit more sizable, about 15,000 times paper buying it out there, buying the 19s, selling the 22s, and a little bit of some three-way action out there earlier this week as well out there in Dees with the old vertical call spread versus or paid for by some downside puts. In this case, it was the Dees 2028 call spread versus the Dees 15 puts going up 9,000 times. Paper obviously selling the puts, buying the call spread. So that one looking particularly well timed. We'll have to price out that one to see how it looks. And while I look for some real-time data for our listeners, Mr. Rock Lobster, anything lighting it up over there in the pitch chat this week from a VIX perspective, VIX options perspective, that was catching your eye, that sounded particularly intriguing either to you or to the legions of option pit mentees?
Well, I guess the only one of we avoided just selling any vol product volatility or anything like that this week. Normally, just for option pit in the chat room and stuff. Vol was still it was, I guess, in a weird way. Normally, when VIX hits 20. And this would be an interesting stat because I know Russell is the king of the VIX stats. Normally, I found that when VIX hits 20 once, it hits 20 twice. It's kind of where there's smoke, there's fire, but there's usually, okay, where's the fire? Where's the fire? We don't know. And then it becomes apparent, a few days later or something like that. So there is that component. We just noticed the aggressive bid for, the futures should act a certain way as you're getting into expiration, meaning when things are normal, the vol futures should kind of be slumping around down to the cash. There'll always be a little bit of a premium, but for the most part, the big premiums go away. And this time, it never was really like that. It always was staying bid. They were jumpy, and I don't think it was very easy to trade. It's like almost like iron condors were the best if you want to sell juice or something. Just kind of staying away from the vol products and stuff like that. Time spreads, anything like that, different ways to buy volatility. Because I think ultimately everything is, again, centered around December. We rallied hard. Who knows, exactly why, maybe just bouncing from the bottoms. But now we're setting up for the Fed again, and 20 volatility is not unreasonable for some Fed activity. And when you look at the term structure for all the indexes, there's a big old fat bid on the decent ordinary cycle. And it doesn't look like it's going away anytime soon.
Like we said many times, when Miss Yellen starts waving that finger, we're hitting 20 in a heartbeat out there. In the 20.
That's what she has in her briefcase.
Yes. That's the finger premium. Instead of, Greenspan had the briefcase premium, the briefcase variable. She has the finger premium. She starts waving it, and market goes to hell, and we hit over 20. I'm parsing some of this data here while you were talking, Mr. Rock Lobster, and looks like, surprisingly, despite the fact that we're putting up a lot of paper out there in VIX land today from an options perspective, usually expect to see some pretty sizable prints, and there are a few. There's the, looks like a Nov 20 D's 23 call spread going up 16,000 times, so obviously 32,000 contracts in total. Paper selling pretty aggressively, actually, below the bid for about 66 cents or so there. That's probably the most sizable trade we see on there, and a few 10,000 lots of buying some calls here, and it looks like pretty much paper closing. Aside from that, for 3 or 4 cents. Aside from that, mostly smaller prints, which is kind of interesting. Usually, like today, you might see some big names. Who knows? Like our 1x3 friend out there back again, putting up close to 1 million contracts, or some other big whales that really will put up a lot of this volume. Today, it seems like the market en masse is just flocking to VIX land and putting up a lot of small paper. Again, maybe that flood of retail coming in as well, which you might have expected earlier this week, but I guess everyone decided today is the day to put up some VIX. Talking about what people have actually been trading over the past week, some of the hot VIX strikes. Today's paper, obviously, notwithstanding, this was coming into this morning. We're starting off the number one, the big hot strike, where everyone's still playing the ever optimistic Nov 30s, 333,000 contracts open over there, followed by the number two strike, the Nov 20s, with about 320,000. I believe that's part of our 1x2 friend, but don't quote me on that. I'll have to check the exact strikes. And then down to about 300,000 of the D's 20 calls over there. Number four, we drop a little bit, 265,000 contracts all the way out to Jan. The Jan 30s, even more optimistic out there. A lot of upside love in VIX land these days, followed closely by about nearly 250,000, nearly 250,000 of the Nov 25s open. Number six, the Nov 26s, 213,000. Then we drop below the 200,000 mark, 195,000 of the Jan 22s. And we got number 8 with the D's 30s, about 170,000, followed by the D's 25s with 163,000. And number 10, the Nov 19s with 158,000. Again, you may have noticed something on that list, or perhaps noticed the lack of something, which would indeed be a put strike. No puts in the top 10 this week, perhaps boding for some continued upside out there in VIX land over the coming week. On the last episodes, we've had at least one, sometimes two puts out there in the top 10. Overall, about 8 million contracts open, which is fairly sizable from a VIX perspective. And net, I mentioned the volume is pretty light, but net, the paper flow in general and the interest out there has been fairly strong. We're in about the 80th percentile in terms of overall open interest going into today. That's, of course, the 1 year 80th percentile. So you go farther back, I'm sure it'll fall off a little bit. But in terms of the 52 weeks, it's about the 80th percentile up there. So fairly strong from an overall open interest, overall interest perspective as well. And of course, as we should mention, there are indeed some holidays on the horizon here in the States in a few weeks, so that always wreaks havoc with the volatility space, and we'll see. Perhaps that's starting to play into why we're seeing such interesting bifurcated trading out here in the volatility landscape this week. Slipping away from the broad market volatility, looking at some specifics this week, we are on the tail end of earnings season. We've talked previously on the show about how it seems like there's been almost 2 seasons playing out. Some of the big names, Microsoft, Amazon, Google, etc., really just knocking it out of the park, blowing the doors off of their estimates, of their straddles, of their volatility, call it what you will. They're just really rocking and rolling. And a lot of other names, it seems like most of them really underwhelming. From an earnings vol perspective, it seems like we had some bigger names this week, not as many. We had Cisco last night after the bell. We were talking about them a little bit on the option block, and it seemed like the initial blush was going to be fairly underwhelming as well. They were pricing in about nearly $1.50 on that straddle, so it worked out to about 5% move, and they were only off about 30 to 40 cents in the after hours at one point. But today, going into today's trading, they're off about $1.75, so about 6%, so actually outperforming their straddle a little bit to the downside. Mr. Russell, I know you've been out there in the hinterlands of the South getting your book learning on, but any particular earnings volatility, any earnings events catching your eye this week worthy of note, or is it kind of getting into the quiet part of the season for you?
Not this past week, and I know we're not supposed to be doing crystal ball yet, but next week is actually a pretty significant earnings week, and we have Shark Week. It could be Retail Week next week because it's Home Depot, Walmart, Target, Best Buy. They all, and Abercrombie and Fitch and some others, all report next week. And hearing what they say about the pending Christmas season could have quite an impact on the overall market. So it's not quite behind us yet. We always have this one last gasp of earnings, and it's the retailers that report on off quarters. So next week will be interesting to look at it with respect to that. And everybody places a lot of emphasis on the consumer. We will, we'll definitely get a read on the consumer. So, and Walmart as well. Somebody just reminded me. A little birdie put a note in front of me and said, "Remember, Walmart reports next week as well."
It's amazing how those birdies come out. But of course, we have had a little bit of insight into some of the retail as well. That perennial dog of late, JCPenney, reporting this morning, and off to the downside races yet again, off nearly 15%, trading right around 7.5 today. So yeah, the continued saga of JCPenney continues to unfold. They've tried to reinvent themselves multiple times to no impact, even though it does seem, you mentioned retailers, on a broad tangent for a second, I just had an email pop up in my inbox while we're doing the show here that Motorola is launching a retail store here in Chicago starting tomorrow. It does seem like retail is kind of the hot category for a lot of firms again. Amazon's launching retail stores, a lot of online retailers who traditionally have flouted the brick and mortar, all the costs associated with that, are now starting to launch their own brick and mortar outlets. They've seen what Apple has done to great effect, not just from a sales standpoint, but also from a branding and marketing perspective. Also, you get a lot of market research out of these stores. There's a lot of value to them, even though people have been saying for years, a big box retail going the way of the dodo. So maybe, who knows? Everything old is new again. Apparently, brick and mortar retail is also new again. And we'll see next week, perhaps in some of these numbers, that they start to reflect the impact of that. But moving away from the land of retail out there to the shinier stuff, where we're getting into the land of gold. We've talked a bit on recent shows about how gold was catching a bid to the upside in terms of vol, and how the call skew was just getting astronomical out there. I mentioned, people were recommending 1x3s out there, very regularly, staid research houses. You don't see that very often, so things are getting pretty steep from a skew perspective. You're starting to see those types of recommendations floating around out there. We've seen some interesting developments in gold since then, and good old GVZ, the gold VIX, still pretty elevated, up to about 18.5 or so right now. So even elevated off last week's about 17.5 level. So catch another point out there in gold. Vol land, we have seen some evolution of the skew as well. The calls are still bid, but not as aggressively as they once were. It seems like a lot of that concern, a lot of that interest, a lot of that premium has migrated to the downside in terms of vol skew, with people starting to say, hey, I need to hedge some of this downside, and it seems like it's extending out pretty far in terms of the term structure out there. So the concern, the interest, the bid, call it what you will, maybe shifting a little bit, not as call heavy as it once was, perhaps a sign of things shifting out there in the broader gold spectrum as well. And of course, our old friend GLD, we're lighting it up as well. Options open interest, extremely heavy out there right now, on the 98th percentile in terms of its 52-week percentile where it falls there. So extremely heavy out there. Calls still leading the charge. They're at about the 96, puts only about the 89th percentile. So it still is call heavy from a net volume perspective. But still interesting stuff, and the skew seems to have settled down a little bit out there as well, where for a while there it was extraordinarily heavy. Still steep, but not quite as historically steep. Mr. Rocklops, I know you like GLD. Has anything been catching your eye out there in the shiny stuff over the past week?
We've been trying to find a position in it, and it's been tough. Vol in general has been, the at-the-money vol has been a little lower. It might be picking up a little bit now, but for the most part, you got realized vol that's 9%. It's about as low as it's been all year. So if anything, gold is saying that Yellen's raising rates and the inflation thing is not really going to be a problem. If you're looking at the price of it, it's kind of bouncing around toward year lows. So is it due for something? Certainly, possibly, but it near the money vol. Almost anything you buy in there, it feels like a little bit of a morass, because it's, even though the vol is relatively cheap. Cheap on looking year to year. The realized vol is nowhere, but it's a tough trade, right? You're going to buy options in gold, and you're going to sit there and watch it go nowhere. It's been a tough trade, I guess. So the skew is making a bid, and it just doesn't look. It's just hard to put something on that looks priced right. That's all.
Yeah, it is a difficult environment. 1x3 is notwithstanding out there to find the right position for, and the effective one for this environment. Also out in commodity land, the crude moving around quite a bit. We talked on our last episode, and indeed, if you're into crude and crude options, check out our recent episode of Long and Short of Futures Options. Of course, we record with the CME, where we got pretty deep into the surprising bid that's been lurking out there in the downside in crude oil puts, going pretty far out, all the way out to Dece of 2016. In fact, where we see some of the sharpest and steepest bid to those puts is actually out about a year from now. So that's kind of interesting, showing it's a longer-term concern, not just a near-term blip on the radar. And it seems like the near term playing it out in the oil has borne out that concern, as we're pushing towards the downside around the 40 handle there in a lot of different products, or threatening to do so. And indeed, that has played out even more in the volatility over the past week, with the increase to the bid out there in the old puts. Of course, the near term portion of the curve is just off the charts in terms of all downside all the time. But even as you get a little bit farther out, again, all the way out into the middle and the end of next year, that bid out there to the downside continues to manifest itself. We're also seeing a little bit of creep up out there in the oil vol as well, with OIV and OVX both hovering around that 43 to 44 level, again, rallying from their recent forays down into the 30 handle level or so. Mr. Russell, has anything caught your eye out there in the commodity landscape? Could be in the shiny stuff, or indeed out there in the Texas tea. You are out there in Oklahoma, you're getting into that oil land. You're starting to become a bit of an oil aficionado.
It's interesting that I wish you had not asked me that last part at the very end, because I'll forget my market forecast. But it's interesting that you mentioned being in oil country, because all the students here do come from other parts of the country. And we're noticing that there are a lot fewer people in the hotels here than there used to be when we first started doing this program about a year ago. And we think that we're going to kind of watch it and see if you can see the economy change in Oklahoma, which is very much of an energy center. So we're having anecdotal intellectual conversations about that while we're in residence. With respect to the oil volatility, or I've noticed that the OVX, the CBOE Oil Volatility Index, which is based off of USO option trading, it remains extremely elevated even when we aren't getting big day-to-day moves in oil. And when you see something like that, you assume that there is there's a bid in one direction or the other, with some concern in one direction or the other. And it sounds like you keep hearing calls for higher oil prices, but it sounds like the people that are actually putting money to work are much more concerned about a drop to the 30s for oil, which is pretty easy to say when the futures are almost there at this point.
Yeah, it seemed a little bit maybe histrionic a few weeks ago when we were pushing 50 and all these bids were materializing out there in the puts, hedging on moves below south of the 40 handle. Now, a week or two later, it seems perhaps prophetic that they were concerned about that to the downside. And if everything that's been playing out in oil continues to play out, it looks like we may be playing around that range for the foreseeable future. All right, listeners, that's going to wrap it up for the volatility review for this episode. Because I want to make sure you guys get some time on the show, we're going to dive right on into the volatility voicemail.
It's time to share your thoughts and opinions with your fellow volatility traders. It's time to check the volatility voicemail. Make your voice heard by dialing 779-669-4VOL. Posting a comment on the optionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider.
All right, everybody, welcome to the volatility voicemail. Like the man said, this is the portion of the show where you guys get to take the reins and dictate the course of our discussion. The first one comes in from listener JJL. He writes, "Hey, I got a question for the volatility radio program." Well, you sent it to the right place, Mr. JJL. He says, "After listening to your program, I decided to take a look at VIX weekly options. But I'm looking at the quotes right now, and the weeklies are significantly wider." I'm assuming he means a bid-ask spread there. He says the VIX Nov 26 calls are about a nickel wide, the D's 26 calls are about a dime wide, and the Nov 26 weekly call is 15 cents wide. Strange that a nearer term contract would be substantially wider than a farther off contract on the same strike. You guys have been talking about VIX weekly volume being high, so why are the spreads so wide? Do you think it's worth the approximately 33% increase in cost to trade a weekly versus a standard monthly? Thanks for the show. Keep up the good work, sirs, and welcome aboard to Russell." Well, there you go, Russell. Some love from our listening audience. He brings up a good point. We've had a few other people write in with some similar questions saying, "Hey, I see these weeklies are rocking and rolling, but they're so wide. What's the deal with that?" And, it is kind of interesting. I did kind of notice that myself when they first started printing. That's kind of why I was surprised that they were putting up so much paper, because it seems like this is, and maybe you have a viewpoint on this as well, Russell, is that it seems like this is par for the course with the launch of just about any new options product these days. And we talked about this a lot when the minis came out and then subsequently flopped. The spreads were atrocious out there in those products. It seems like just as a rule, the market making community has been so just pounded and just beat to death over the past decade or so that they're so reticent to embrace any new product, even something that seems like a surefire of a hit as a VIX weekly. They're still putting things out there pretty wide. They're not really willing to take a lot of risk. Now, the fact that a lot of paper is going up out there shows me that they're pretty willing to step inside those markets. I think those are more just the goalposts that they're setting there to make things a little bit safer for themselves so they don't get picked off while they feel out how this new product is going to perform. But yeah, you're not going to be doing, some of these contracts are going out with over 100,000 contracts open interest on a weekly. So clearly people are stepping up and getting things done. They're not putting everything up 15 cent wide. If they were, this would be the glorious second coming of market market making. Everyone will be flocking into these products all day long. But that said, it is kind of interesting to see that they're still putting them out there that wide. But I think that just reflects, at least in my opinion, some of the reticence and just the damage that's been done on the market making community and their reticence to embrace anything wholeheartedly up front without seeing a lot of paper going through it first. Is that your take as well, Mr. Russell?
Yeah, first off, the big volume that's been coming in, there have been some block trades that have gone off, and they tend to get negotiated in the middle one way or another. And I think the reason that we're seeing, on the screen, wider spreads than we're used to for the standard option contracts, it relates to the spreads for the futures as well. And while you were talking, I pulled up the the futures quotes for the next. I basically pulled up the futures table, and I was looking at the 1124 futures, and they are 1935 by 1965. So they're 30 cents wide right now. And the reason that makes a difference for the option guys is because that is what they would preferably like to use to hedge themselves. And there's a wide spread on the futures as well. And so then how are they going to protect themselves a little bit? Like you said, that they don't necessarily want to get run over by a large trade that comes in on the screen, so they keep the spreads relatively wide. We've had the exact same situation in the SPX quotes forever. And the reason that the quotes are wide in SPX, even though the underlying trades like water, is not wanting to get run over a little bit. And and what they're showing is generally what they're willing to do size trades for in SPX. I think that's the same thing that you're seeing with the VIX option, the short-dated VIX options. Now I'm going to have to go out and do a trade in one of these and see if I can get filled, really close to the midpoint or something like that, so I can have an example to work with. But I do think that if you try to split the bid-ask spread, you still have a pretty decent likelihood of getting filled unless you're putting huge size out there.
Yeah, that's got to be the course. So many contracts are going up. There's no way that everyone's lifting offers and hitting bids. If it is that case, then everyone's going to be flocking into the weeklies from a market making perspective. You bring up a good point about the VIX weekly future. I think we sometimes think we just we don't mention these things all the time because we think sometimes the audience knows these things, but we should mention that as well. The VIX weekly options are indeed queuing off those VIX weekly futures, a newer product in and of themselves. They only launched a few months back as well, so you kind of have a new product on top of a new product on top of the market makers being very reluctant to embrace new things. So it's kind of reasonable to expect a little bit wider spreads out there for the foreseeable future. All right, next up we have a question. This one comes from, let's go for Mr. Pick Six. He sent in some good ones in the past. He says, hey, when a takeover is announced, does the volatility, and he puts in parentheses time value, of farther out options erode or go away? A pretty interesting question, Mr. Rock Lobster. There's different phases, of a takeover. He says when a takeover is announced, he probably means more like when the takeover is completed, because when it's announced, it's just announced, just in the news, unless it's confirmed and it's a signed, sealed, and delivered type deal. These things could be announced and there could be counter bids coming in. The name could be in play. A lot of things could happen after a bid is initially announced. So you are going to see, obviously, that underlying gap up to whatever that level is. If it's a serious, credible bid, you're probably going to see some movement towards that, depending on how credible the street views that takeover offer. Then you might see other names coming in, unless it's it's announced and it's a signed, sealed, and delivered thing. Those are kind of two different scenarios. So maybe, Mr. Rocklobster, why don't you walk our friend Pick Six through maybe the initial kind of blush when these things are announced, and then what happens when it's really more of a signed, sealed, and delivered deal, and XYZ is buying YYX for $10 a share.
Well, there's all kinds of interesting stuff with takeovers, which we call special situations. It is the classic. There's the gamma type part of the options, and then there's the vega type part of the options. For the most part, you got to take over, stock pops, goes someplace. What you normally see is volatility definitely moves. It generally moves, let's just call it a few different places. If there's the chance of a topping bid, you could see the volatility go actually a little higher. most of the time, volatility of the acquired company will go to the volatility of the acquirer if the deal is all stock. The volatility will go towards zero or very low single digits, what we call hat sizes, if there is a cash deal or a partial, like a stock and cash deal, which generally cuts the volatility into some fraction of what the deal and stock and cash is. So you've got and over time, right? So if you have a 2-year leap, that time premium is going to get eviscerated. So what you can tell, once you start looking at these types of things for a while, how the market is kind of pricing the deal. If there's still a lot of time premium left in, let's say, the longer term options, the market's possibly thinking, there could be a topping bid for stock. So there's basically, it's how the shape of the deal looks is how the volatility is going to be altered in the coming year. That's generally how they trade, and then of course there's tenders and stubs and all kinds of other special situations for options. But that generally what happens is, but his question is, most of the time it will drop. Generally, again, depending on what the takeover looks like, that will tell you where the volatility is going to go or settle. So what happens, a lot of these deals, especially as a market maker, you're always aware of, just because somebody's walking in with a cash deal here, drops the vol, you have all of a sudden you have 6-7% volatility or 5% vol. If somebody comes in with a better stock deal, all of a sudden the juice in the options miraculously reappears. So you have to be a little careful. Well, actually, not even a little careful, a lot careful on how you deal with premium in a takeover. And even up to the last minute, I've seen deals fall apart where a put that was worth, 3 cents goes to $25 because the deal falls apart. So the answer to your question is yes, in general, it generally decreases, but there's, with the Sturm und Drang, or if I even said that word right, I always have a hard time, it tongue-ties me, what really can happen in the whole thing. So, but it's a good question. Great question.
Yeah, big caveats out there on that one because there are no hard and fast rules. In general, the deal's going down next month is a done deal for $10. Probably not going to be a lot of love for a 1 year away $20 call. But as Mr. Rock Lobster said, sometimes things change at the last minute, and all of a sudden that call could have new life because firm Z's coming in, they're bidding 18, and all of a sudden things change a little bit. So yeah, a lot of caveats in that one. But in general, I think your estimation of what happens is pretty much on the money. All right, that's all the time we have for your mail this week, and now we're going to keep on rolling into our final segment. It's time to whip out our crystal balls.
It's time to peer into the future and reveal what the volatility gods hold in store. It's time to look into the crystal ball.
All right, listeners, I mentioned at the top of the show, we'll see if the race to 20 was on, if we could eclipse it, if we could cross it here in the VIX Cash by the end of the show. And we were getting close. We're getting up to about 19 in the orders or so, but still not back up at that 20 handle or so. So we're pretty close to it. So that said, we were talking on the show last week, and there was a lot of kind of what's the future holding? A little bit of a move to the upside, a little bit of move to the downside, kind of a little bit unched. I think a lot of us, I think myself included, we're leaning towards maybe a little bit downside. And here we are this week, and the Yellen finger premium back in full effect, giving us a nice 5 or so handle move to the upside out here in VIX Cash land. So here we are flirting with the 20 handle this week. Whither will the volatility gods bring us next week? And perhaps Mr. Russell, will start with you. We're going to be hanging out at this 20 handle. Are we going to break north, maybe get back into the low to mid 20 range, or are we going to this is a momentary aberration and we're heading back down to Mr. Sebastian's new normal of the VIX around 15?
Looking forward, and I'm going to go beyond this coming week. You know what? I would not be the least bit surprised if VIX doesn't dip below 16 between now and the end of the year, and that's a fairly bold statement if you start to think about the holiday effect that you get with VIX. But I think we are entering a higher volatility regime. Traders are going to start to look forward to 2016, and they're not going to be very positive as they look forward to next year. You know, depending day to day, we're either up or down on the S&P for this year. But I believe if you go back the last 11 years, we've only had one down year in the S&P 500. So you got to think that the market's tired to the upside, and as people start to look forward to next year, they're not going to be particularly positive on stocks, and that's probably going to result in a higher VIX.
There you go. One vote for some upside, at least down the road a little bit. Mr. Rock Lobster, where are you falling, sir?
I'm going to stick with, we crossed 20. We'll see it again. We'll see it again between now and Yellen. The sell-offs I don't like are the sell-offs that had no obvious news. And it feels like we're kind of seeing that again. So I don't really have any substantial vol position. Love to put one on. But as of right now, I'm just kind of waiting and watching because it's all just a little ugly. And sometimes a little ugly can be a lot of ugly. So I would see, it would not surprise me to see a higher VIX next week. And the market's still kind of falling apart a little bit. I think this oil thing, as every time we plumb this 40 handle in oil, stocks always hate it. And I know that's a good part of the market cap is oil. So we've had great financials. We've had great big cap technology doing pretty well. And I don't see any reason why those are going to do, not still, continue to do fine. But when you have a big chunk of the market that continually, the value of those companies keep getting smashed around, that tends to pull the rest of things down. That's what we're looking at least right now.
Yeah, a lot of interesting stuff afoot out there. I think the Yellen finger premium is here to stay. I don't see it going away anytime soon, as it has just exploded into the marketplace yet again. So I'm kind of leaning along a similar lines, Mr. Rock Lobster, of this level, maybe a little bit higher into the low 20s. I think, protracted downside could continue in the marketplace. I could see that causing us to gradually drift up. I don't see the explosion to the upside like we saw over the past couple of sessions. That said, nothing would surprise me anymore, but I see us maybe gradually drifting up or remaining around these levels at this time next week. Now watch, of course, they'll come out on Monday and say, of course, the raise is off in December and all this finger premium will go away. But that remains to be seen. We'll have to wait to next week to do it, listeners, because that's all the time we have for the Crystal Ball segments. Also all the time we have for this episode of Volatility Views. But before we go, let's check back in with each of my cohorts here on the old Volatility Views panel, see what's cooking in their respective necks of the woods. We'll start with you, Mr. Russell. Obviously, a lot of things afoot over there in the land of CBOE and live vol. I know you guys are working on a lot of things at the Institute, things as well. So what's coming down the pike you might want to leave our listeners with, sir?
Well, what's coming down the pike is we are going to be in Asia November 30th and December 1st for our first ever Risk Management Asia in Hong Kong. And so, and this sounds so blatantly self-promotional, but I've got the microphone. I think today is the last day for the early bird registration for that. So there, I said it. And the best thing that's going on, it's going to be the first risk management that I speak at. Quite exciting. So that's kind of what we're focused on right now.
You haven't actually spoken at them before? I thought you have.
I sit on the front row and I write a blog about every presentation, but this is the first time they're going to put me up in front of people.
Well, listeners, we talked about RMC before many times here on the show. We've had some actually interviews and sessions from those events on the program in the past, and certainly a lot of the speakers have been on the program as well. If you'd like to check it out for yourself, maybe you're interested in the Asian version, surf on over, I should say, to CBOERMC.com, where you could register for Europe or the U.S. or indeed the new Asian event happening from November 30th to December 1st. And Mr. Rock Lobster, what's going on in your neck of the woods? You guys heading to Asia anytime soon?
I'd go to Asia to see Russell speak and then go have some street food afterward. Maybe heckle him a little bit just for the heck of it. I don't believe you. Anyway, we have. I've been to some of Russell's private presentations. They're quite good. But we have fixing broken positions coming in December, and a basic intro boot camp to option trading from Option Pit. Our first ever, just basic stuff, basic. And hopefully that hits a chord. We do the sophisticated stuff pretty good, but we haven't really touched on the basic stuff yet. So hopefully people will have an interest in that, and that will be for January. So it makes a fine Christmas gift. Like I said, for all of our classes, it's an 8th on a 10 lot, a very digestible thing. And normally you will definitely learn something that will save you that money down the road. That seems to be the response of all of our clients, which actually keeps growing on a monthly basis. Quite satisfied with that.
That's a good thing. And on behalf of the Rock Lobster and Mr. Russell, and indeed myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show, and of course, sending in such great questions. And we'll see you next time on Volatility Views.
Thank you for listening to Volatility Views, the premier program for volatility traders. For episode archives and detailed show notes, please visit theoptionsinsider.com/volatilityviews. Be sure to make your own voice heard by leaving a volatility voicemail at 773-669-4VOL. or by posting a comment on theoptionsinsider.com, sending an email to questions@theoptionsinsider.com, or posting your questions to twitter.com/options or facebook.com/theoptionsinsider. Volatility Views is brought to you by Russell Investments, a global asset manager and one of only a few firms that offer actively managed multi-asset portfolios and services that include advice, investments, and implementation. For more information on Russell Indexes and RVX, please visit russell.com/indexes.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.